Good morning. So in our next panel session, we cast a spotlight on the next generation corporate leaders in Malaysia. As you can tell from the title, they're all under 40. And today we'll be discussing a range of hot topics that market watchers have been talking about. So things like ESG, inflation, tech, and digitization, of course, through their lens. So we're very excited to have with us today Pierre Pang, CEO of Mami Double Decker Group. I think Mami is a very iconic brand. We all remember it growing up eating. Not only do they have Mami, they also have the Double Decker brand and a few others. They export and distribute snack foods, beverages, and instant noodles to across 80 countries globally. We also have Valerie Ong. Valerie Ong is an executive director of KIP Group and KIP REIT. KIP REIT is a retail-focused property trust based in Malaysia. They've now got 7 community-focused malls targeting the mass market, so M40, B40, across 5 states in Malaysia. And finally, we have Raymond Chua. Raymond is also an executive director and the chief investment officer of CMY Capital. And CMY Capital is the investment holding company of Tan Sri Chua Mayu. So ladies and gents, welcome. I thought I would start on a little bit more of a personal note, given some of these faces may not be all that familiar compared to other people you might have seen on the panel or within the Malaysia circuit. So maybe let me turn this to Pierre first. Like I said, Mami is such an iconic brand. And in the last panel, we talked about talent in Malaysia, the brain drain. You've had the opportunity to study abroad, to work in a multinational. What was that like for you? Did you have a calling to come back to Malaysia, specifically to Mami? And I guess around that point, in a lot of family businesses, we're at an inflection point where a lot of the next generation, so second, third generation, they're either about to take over or they have already taken over. So maybe you can share your perspectives around that as well.
Okay. I would like to say that, but I'll just go straight to the truth. I think at the end of the day, when national service calls, you come home and you serve, right? And in this instance, national service is our family business. So Mami is a 52-year-old snack company founded in Malacca. And essentially, one of the things that we're very proud about is essentially how my granddad and my dad together founded the company out of great core values, right? And essentially, one of the things that was, we were always brought up around business, right? Even from a very young age. Dinner tables were all about business. Holidays were all about business. So essentially, we grew up learning about the business from the sidelines of a dinner table, right? So with that, it was very natural that when the calling came towards essentially serving the family, I think that was something that's a very natural path. And at the age, graduating from Melbourne and coming back, I think I'm also lucky that the business is something that is also relevant to me personally, being it a fun category in this next business. But the other thing is also, I've always said that we've been very lucky given the values that we brought up with. We always see ourselves as a generational business. And the difference why we call ourselves a generational business and not a family business is because essentially, the values that we hold dear as a family cannot be translated to an organization that should be run professionally. So that is why instead of being a family business, we see ourselves as an elite sports team. So if I take an analogy of a high-performing football team, every player in the starting 11 must be the subject expert of their own position. For example, if I'm a striker, then I'm measured upon my ability to score. And if I'm a goalkeeper, I'm measured upon my ability to basically block out goals. And that is something that we have to have in terms of mindset and also the acceptance emotionally as a family member that if I am not the best position in the role, then I have to step away for the benefit of protecting the legacy that our grandfather has built. So that's something that is very, very clear. Aside from that, our founding members have also set certain policies that I believe are very important in generational businesses. And that is essentially that prior to coming into the company, you must serve outside. Based on the reason that if you're going to crash a company, please crash someone else's company and not mine yet, right? And to have the real experience of working for someone and building the humility before, that groundedness before coming into the, so to speak, family or generational business, right? And the other thing as well, my dad, never had the opportunity for tertiary education. Back then, being the oldest son, things were very tough financially. But he's always been a lifelong learner, right? Where he read through books and all that. But when he had the opportunity, he enrolled himself into Harvard Business School on an executive MBA, and that really changed the trajectory of what Mami is today. As soon as he came back 30 years ago, invested in SAP, invested in branding, invested in talent, invested in modernization of the manufacturing facility. And that set us the path towards what I would say Mami is today, right? And since then, my siblings and I have been down the same path as well, through ensuring that we have the best education. And on top of that, not only education on the ground, but also education in places like Wharton as well as Harvard Business School since. And that has really shaped our growth mindset together with the values that was set forth within the family.
Okay, that's interesting what you said about generational businesses and practicing outside before coming in. So on that note, Raymond, before your current position, you were a portfolio manager at Affin Hwang Asset Management. Have you felt some of these same things that Pierre has talked about? How has that prepared you for joining CMY? And also maybe talk about your current mandate, because I presume you probably have a bit broader of a mandate now, and does that mean you're more nimble to take advantage of the current markets?
Yeah, so maybe just to give a bit of background also on how I started investments, or how I got interested anyway. So it's quite a cliched story. When I was young, I used to idolize my dad. So I found an exercise book from primary school, and it basically read, my ambition is to be my dad. And it was, I want to be a successful businessman, right? But I had no idea what he was doing at that time. It was over the years where he would say, reading wealth, like knowledge is wealth, right? So he'd always challenge us to read, learn about biographies, learn about history and how people became successful. But there was one book that really related to me at that time when I was young. And it was basically investing in things that you know. Investing in household names, strong brand names. And at that time, it would be, probably when I was young, it would be things like Mami, right? But in that book specifically, it was Pepsi, it was Coke, it was Google, right? Things that I used at that time. And then when I would come home from school, my mom would be watching CNBC, and below at CNBC would be the ticker, right, of all the transactions that would happen over Bursa. And things that would relate to me would be Maxis. So Max, I would say, Mom, you should buy Maxis. And then when it go up, I'd be like, oh, I told you you should have bought. But it went down, I'd be, okay, just keep quiet, right? Typical sell side. But yeah, that was how I got interested in investments, and it was since young that I got nurtured. And then, but my real investment style was really nurtured when I joined Affin Hwang in about 2017. And that was when I learned how to value companies, how to do fundamental analysis, and basically learn how to invest over the long term, right? And what I do right now is probably on a broader basis, but I cover the same markets. So I do Malaysia, I do Hong Kong, APAC, I do America. I look at a lot of technology companies. That's my strength. But what's different right now compared to what I was doing as a portfolio manager is I used to look a lot more bottom up, right? It would just be a collection of stocks that I know would do well over the longer term. But right now, it's a big combination of macro analysis combined with bottom up approach, right? And over the 12 months, if you didn't look at all at macro, you would have probably just been hurt all the way. And so that macro analysis and how the recession is sort of imminent, that sort of helped protect us to a certain extent over the last 6 to 12 months.
Okay, so we'll come back to you later on your macro and tech thoughts. But first to Valerie, you are also a woman in business. There's been a lot of focus on encouraging the participation of women in the workforce and so on. Your thoughts about that? Do you feel like that has helped or hindered you in any way? And the earlier session we were talking about policies, right? So what do you think that the government agencies or the private sector can do to encourage women further participation in the workforce, as well as to aspire to positions of higher leadership?
Thank you, Tammy, and JP Morgan, as well as Bursa Malaysia for having me, alongside with these two very amazing, successful, dynamic gentlemen. I think I've got the most question compared to the both of you. If I may address this question in two separate pieces. First, I think that it is very important for us to have the mindset that regardless of gender, we should be given an equal right to compete for a position fairly based on their merits. As we continue to push for diversity and inclusion in the workplace. Why? Because having equal representation on gender in a company is a sign of a company so-called moving away from the idea of a legacy belief that a business is measured by gender. So if I can give you a little bit more context, I am the chapter chair of the Young President Organization Malaysia, also known as YPO. There are 33,000 members across the world, of which only 11% is represented by female CEO. Let's look at the regional scale. We have about 900 members in the platform, and only 18% is represented by female. Zooming in a little bit closer to home, in Malaysia, we have 111 members in the chapter, and again, only 18% is represented by female members. I think the numbers is growing. Definitely, there's a lot of potential, but the growing rate is still at a very slow pace. Which is why there are a lot of agencies and organizations out there trying to promote women empowerment and raising this kind of awareness to basically motivate and encourage female to take on a bigger leadership role in the workplace. I think it's very important to also put this agenda into action. As a leader myself, I have been actively pushing my employees, my young female employees to take on a better role, to prepare them, to nurture them as and when they are ready. But then again, it is very important, regardless of gender, I think, whether men or women, it is very important to have the desire to grow the confidence and courage to want something, you know. It can't be just, talking about it without putting it in action. Yeah.
Yeah. So the desire must be there, and it must come from within, right? It cannot. There's only so much that I guess external factors and external organizations, government agencies can do. It sounds like from the day-to-day perspective, day-to-day interactions, that's quite important as well. Okay, so now let's dive into things, Raymond. We talked about, you mentioned macro and so on. MIDA has just announced that Malaysia attracted a total of 123 billion ringgit worth of approved investments. I believe it's now overtaken or gone back to pre-pandemic levels. And out of that, about 70% or 87 billion ringgit is from foreign direct investment, balance in domestic. What do you think that's going to do for Malaysia, and how is that going to drive our next engine of growth?
So before we talk about FDIs first and foreign approved manufacturing investments, maybe we can just, where FDI plays a big role is manufacturing and also the tech space and semiconductors in the Malaysian market, right? So, but to take a step back, maybe we just talk about where Malaysia sits in the whole ecosystem and where we are in the whole cycle, right? So first off, Malaysia is about 4 to 5% of assembly and test capacity globally. And the Wall Street Journal basically said that about 7% of global semiconductors go through Malaysia for assembly and testing. And in 2021, when Malaysia was in lockdown, you could see a lot more mentions of Malaysia itself in analyst briefings, not just in Malaysia briefings, but in American corporates and also European corporates. So Infineon in August 2021 actually stated that about 100 million euros of revenue was actually deferred because Malaysia was in lockdown, right? And increasingly, that's about 4 to 5% of their revenues on a quarterly basis. And increasingly, you would hear automotive companies state that Malaysia was deferring a lot of output. So you had General Motors, you had Toyota, you had Ford. All these companies were actually blaming Malaysia for deferring the output. because we were in lockdown, right? So COVID really shone a spotlight on the importance of Malaysia in the semiconductor supply chain. So where are we in the whole cycle right now, right? You're hearing so much noise about the whole inventory, build-up in inventories. We had record high inventories over the last 20 years. But maybe if you want to drill down into different endpoints, you could see a conflicting view of what endpoints are on a down cycle and what endpoints are on an up cycle, right? So obviously PCs, smartphones, these markets are on the downturn. China, 2 days ago, I think, announced that July smartphone sales were down 31% year over year. PC sales, because of COVID, everyone started buying more, because of work from home, people bought globally about 260 million PCs in 2021. Before COVID, that number was about 180 million. So we saw a 30% increase just because of COVID work from home policies, right? So that's obviously because people are returning back to the office, that's back on the downturn. That's normalizing. But if you look at the endpoints where automotive, so the EV trends, right? Semiconductor intensity is increasing in EVs. If you look at data centers, if you look at NVIDIA as a data point, NVIDIA grew 61% year over year on the data center segment, but it missed analyst projections slightly. But if you actually drill down on those numbers even more, the US hyperscalers actually grew 100% year over year. Why they missed was actually China was reducing their capex, and that's because China shot themselves in the foot like over the last 2 years, right? So the data center segment and the auto segment is super, super strong. So where does that leave Malaysia, right? And people always say, why are Malaysian tech stocks such highly valued? And why are we sort of insulated from a semiconductor down cycle? And if you actually drill down in FDI numbers, it can be easily explained. In 2021, we saw 48 billion worth of FDIs, net inflows, and that's a record high over the last 20 years. The last time we were even close to that number was 2016, and that was at about 47 billion. But the big difference between 2016 and 2021 was the manufacturing side of it. In 2016, only 12.2 billion was in manufacturing, but we saw a 29.5 billion net inflow in 2021. So that's a 250% increase from the highest before 2021. And like what you said about the approved foreign manufacturing investments, we saw 179 billion in 2021, and about 87 billion in the first half of 2022. And just to give you perspective on that, before 2021, it was only 50 billion. So if you combine 2021 and first half of 2022, it's about a 260 billion approved of investments. And that's 5 years of investments squeezed into a space of 18 months. And so that is why Malaysian tech companies are sort of insulated from the semiconductor down cycle, right? We are just we're attracting so much investments. Malaysian corporates are expanding capacities 2 to 3 times over the next 2 years. And that explains why Malaysia is so highly valued, right? The semiconductor space is going to grow for the next 3 to 5 years because of trade diversion. And trade diversion is obviously because of the China trade war, and also secondly because of China's zero COVID policies, right? So there's so much pain going on over the last year. So that is why the Malaysia tech space is really, really prospering and continuing to grow despite a down cycle in certain end markets.
Okay, so it sounds like you're very long on Malaysia tech and semicon.
We are bullish on the space, but you got to take a 2 to 3 year view on it. There will be inventory down cycles, a drawdown in the next 6 to 9 months, but over the long term, it's still a secular trend.
Okay, and just staying on tech, what about at Mami? So how, on an operational level, how are you utilizing technology, automation, digitization? Has that had an impact on your operations now and how you manufacture, distribute your products?
Yep. So I think that today, unfortunately, investing in automation or investing in basically technology is no more a competitive advantage. It's basically necessary in order to run a business that is very, very competitive. So we have to always be on our toes in regards to managing our costs. And why that's important is essentially that on 2 fronts. The first front is essentially that if we look back into we're a 52-year-old company this year. We expect a turnover of about 1.2 billion ringgit. And it's very clear in our first 40 years of existence, A lot of food companies like Mami, for example, local food companies like Apollo Foods, Oriental Foods, Julie Biscuit, Hubsing, etc. The founders did very well in the first 40 years, focusing on two key value offering pillars. The first is provide a great quality product, but manufacture in a way that is so efficient that these companies or we are able to price at a 20-30% discount versus multinationals like Nestle, Kellogg's, Mondelez, for example. But 10 years ago, we start to see that growth start to taper. And we ask ourselves, how can that be? Because if the proven secret sauce of growth, which is anchoring on quality and great value, i.e. pricing to consumer, then why are we, after 40 years, providing better quality now than ever, better value through the efficiencies and economies of scale? Why are we not growing? Then we realized that 10 years ago, there was a huge paradigm shift. And the shift in terms of a new breed of consumer has now entered the market. And the young millennials and Gen Z consumer are a very different breed from a generation or two ago. Young mothers today demand nutrition. Young consumers demand sustainability. And also, young consumers today demand a story. So when we track back against a generation or two ago, when my grandfather started this business, and you look into the top most valuable companies in the world, you will find the likes of Enron and various other, sorry, not Enron, all the commodities companies, like for example, ExxonMobil, etc., who control the most valuable companies in the world. But if you look into the list today, you will struggle to find commodity-based companies, but rather you will see companies that are able to win in the emotional aspect of selling an emotional value to a consumer. Why Starbucks is able to sell an Americano, which literally is a kopi o kosong, right, for 9 times premium to what a kopitiam could sell, for the same functional benefit of a caffeine kick through coffee. So at the end of the day, we realized that the game now has shifted. In order to avoid the commodity trap, we need to use technology in order to market more effectively, to provide better emotional value to consumers. In the past, consumers may be consuming instant noodles to fill their tummies. But today, consumers are consuming instant noodles as a snack and even a social media tool. So our best promotion to date, it is not a buy 5 packet, free 1 packet instant noodle. But it is providing a ghost pepper noodle, which is extremely spicy, 4 times the premium of the market-leading cup noodle. Why? So that consumers are able to consume it, post it on their social media feed, and wait for likes and comments. Right? So when we struggle to give, when we play the commodity trap game of giving more promotions, more pricing in order to get more volume, the consumers don't want that. Why? We can see that through the reflection of market share is not growing. But once we added a new pillar, provide a great quality product, great value, but yet also great excitement, what we call our secret sauce, the QVE, quality meets value meets excitement, then we start seeing tremendous growth in not only top line, but also margin. Then why would people pay 4 times more premium to burn their tongues? And when you realize that it's because back to Maslow hierarchy of needs, when the basic needs are met, great tasting product, food safety, halal, etc., everybody does that. But the brand that can help me have social belonging, when I go to college and all my friends are talking about this spicy noodle challenge that they've just recently burned their tongue and it's so cool and it's so fun, and I don't or I can't do it, suddenly I emotionally feel left out. And when I can do it, the likes that I can get, the virality and something, I feel like king. So what we find out very, very interestingly is like, during my grandfather's time, he has 6 children. He struggled to put everyone, to bed, filling their stomachs. And therefore, promotions like buy 5, free 1 works fantastic because it's all about the basic needs of great shelter, great enough food and education. But today, what we have found out is that the young millennials and Gen Z consumers are a lot more stressed than my grandfather's generation. Not because they wake up feeling hungry, not because they don't have good shelter, but because of peer pressure. And it's a real thing, as what they call it, FOMO, the fear of missing out, which is at the end of the day, even as something as simple as a snack or an instant noodle, the young consumer today are socially impacted as well. So that is why when we finally understood the game and we evolve our business model to add a third element of excitement and brand relevance, then suddenly we start seeing sustainable growth. And since then, we're thankful to see strong double-digit growth since the understanding of this, even for a basic 50 cent, 1 ringgit product, as simple as a noodle snack, for example. Yeah.
Okay. And specific tech initiatives at Mami?
Sorry, I digressed.
No worries.
Sorry, that was advertisement slot for me. I needed to promote Mami a bit. Technology, I would say, in regards to running the line efficiency, automation, and all that, I think it's mandatory in today's business, like I mentioned. It doesn't add a lot of competitive advantage. Why? Because we are very clear now that we don't want to be known as the most efficient manufacturer in Malaysia, full stop. We must be efficient because part of our value offering is providing great value to consumer for mass scale. But if it's a full stop right after that, then we will not be in business for the long term. What we have to harness technology is in terms of using it to understand the psychology of human consumption, to understand the trends that are coming. So things that we do is we scour Google to look at what are key trends that consumers are typing, what are some of the key trends that's coming up, whether it's a spicy challenge that's coming up, people are into spicy now, or people are into certain cuisine like Korean, etc. Or what are they engaging with their key influencers? What sort of conversation they are having? We have to observe all this, and that's how we use technology to build competitive advantage on the intangible side, because that's where we see value is. If Tesla can be one of the most valued company in the world, it's not because they have the best physical car. Same that we don't believe Starbucks have the best coffee, and therefore they are of great value as a company versus others. And therefore, for Mami as well, our path is to win globally in regards to being most emotionally engaging and relevant to today's generation of consumer and tomorrow. So the technological side of manufacturing is only the precursor towards a value, but the real value is in basically using technology to be more relevant and able to excite consumers more and therefore charge a premium for it.
Yeah, that's very interesting because I guess historically, maybe some people may have seen Mami as more a manufacturer, just distribution of snack foods.
And Chinaman company.
Yeah, fair enough. And so when I asked that question about technology, digitization, I did expect the answer to kind of sway towards the automation side of manufacturing. But you're actually saying you utilize data more to inform your strategy and how you run the business effectively. That's interesting. And staying on the topic of the Gen Z and millennial thinking, ESG is a very hot topic. 5 years ago, some people might have said, it's a fad, it's a trend. I think we're now at the stage where everyone, governmental agencies, our GLICs, our corporates are all talking about ESG, looking at what policies we can now put in place. But I think more for the Gen Z and millennials, this is something they hold quite near and dear to their heart, right? It's something they brought up in a different generation, thinking about and caring about. So Valerie, in Kip Reed, I know that your malls are now powered by solar. This whole topic of ESG, what is your view on that, and what is Kip Reed doing in that space?
Okay, so the environmental and economic benefits of using renewable energy includes generating energy that produces no greenhouse gas emission from fossil fuel. This is one. Secondly, it also improves on the air pollutant index, which is very important moving forward, especially for the future generations to come. 6 of our assets under the portfolio of Kip Reed has a total solar capacity of 3,159 kilowatt. And with this capacity, we are able to generate about 3,700 megawatt hour per year, which translates to 2,422 metric tons of carbon avoidance per year. I know this is a lot of numbers, but for your information, 1 metric tons of carbon 1 metric tons of carbon requires 40 trees for absorptions. So with the solar, the energy that we have generated, it translates to almost 97,000 trees that we have planted per year. And I think this is addressing the whole sustainability ESG matter, which I think 97,000 is pretty amazing in terms of numbers. Can we do more in Malaysia? I think in the household scale, I think definitely we can do some more. But in fact, my industry, the peers in my industries are already, you're seeing a lot of interest in adopting renewable energy in their businesses. But I am hoping that the upcoming budget, perhaps the government can address and approve the P2P trading, which is peer-to-peer trading, and as well as that carbon credit trading initiative to incentivize more people to invest into renewable energy.
Okay, thanks. And maybe let me come back to Pia on that, because ESG, there's a social component there. There are some Malaysian companies in sectors such as palm oil, at one point the gloves as well. They've taken some heat on some labor practices. Your manufacturing company, you have people at these plants, at factories. What are you doing? How are you thinking about that social compliance aspect?
Yeah. So I think in spite of being a private company today, we take ESG very, very seriously because we feel that is in the future is going to be a basic requirement, and therefore it's something that we have to keep up to speed and also differentiate ourselves versus some of our competitors. So in regard to the environmental side, I think it's very straightforward. I think solar is something similar, like keep up, we've invested heavily. Rainwater harvesting as well, but doesn't go back to the food, it goes into washing of toilets and all the other things, don't worry, right? But the key focus for us is on the environmental side, we have a lot of steps into moving towards fully sustainable packaging, only also because that's what the young millennials consumer today are demanding, not just a nice to have. But where we spend the majority of our time and investment is in the social aspect, right? And a lot of the times we look both internally as well as externally. Why again? Because as what I've shared, we are an organization today, while we appreciate the physical part of things, of a business, we feel that value is today created more on the emotional or non-tangible side of business. So as an organization, how we have transformed the organization operating in our culture is essentially, if you think about a traditional organization chart, you see a pyramid, right? Where the CEO sits at the top, then the senior management, middle management, frontliners, distributors, consumer. And one day I had a conversation with my dad, and I said, if I wake up every morning and the only person I think about is you, because you're my boss and the key shareholder, and that's all I think about, serving your immediate needs, then I think that we will be putting an organization in great risk, right? Why? Because at the end of the day, in our lens, the consumer is the boss. When people ask who's the CEO of Mummy, it's not Tan Sri Pang in the past or it's not Pierre Pang today, it is essentially the C is the consumer, the E is the employees, right? And the O is our organizational partners. And if we wake up every morning to have in top of our mind a priority to serve our consumer the best that we can, and to ensure that our employees, especially the frontline employees, are served well because they are taking care of the products, whether manufacturing frontline or in the sales frontline, taking care of the customer and consumer. And if we can take care of this well, then I think we will be in business for a long time to come. We're able to understand the changing consumer need and pivot accordingly. But if we wake up every morning and only think about the shareholders, sorry, maybe not the right forum, right, in Bursa talking about this. We believe that if we do our homework well and we take care of consumer, we take our frontliners who are taking care of consumer, eventually the shareholders will be having longevity and sustainable growth in terms of value. So what do we do? Today, in the past, it's very easy to see that when problems come, COVID comes, or basically right now war, we see commodity prices shooting up by 400%, 300%. Anything that's going up 50% in terms of raw material costs, we say thank you very much, right? Because 50% is not 400%. That is the type of madness that we are content with when it comes to inflation today. But what we realize is that many traditional ways of cutting costs is you cut what you can see very clearly in an Excel sheet in a P&L. Marketing costs. cut. Why? Because immediately that goes to the bottom line today. But every dollar of marketing cost, assuming invested efficiently, sacrifices future revenue, right? And you can cut on employee costs, for example, bonuses, you can cut on salaries, you can cut all these things. But at the end of the day, at Mummy, what we feel is, as what Tan Sri, my dad always says, is that we should focus on the things less obvious. We should focus on the money on the floor that you cannot physically see but is there. What do we mean by that? Cut first in areas of efficiency. You know what I mean? I mean, not cut first in areas of inefficiency. For example, before looking at cutting marketing which impact into future growth, why can't we essentially cut on the wastage? Just a bit of context, we sell potato crisps in a canister, for example. Every piece that we give extra, for example, 160 gram is per pack we give. And we give an extra one piece, which is 2 gram, 162 gram above what we are supposed to give. It impacts us 8 million ringgit a year in profits. One piece, based on today's volume. So a lot of the times, what we say, therefore, is that we are very fierce when it comes and aggressive in terms of inefficiencies. Whether it's in terms of manufacturing side, or whether it's in terms of sales trade spend, or whether in terms of marketing spend that is ineffective, right? And essentially, that is what we cut out. And in turn, these savings we invest back into our people. What do we do? For example, our frontliners who come from Nepal, Bangladesh, as well as Myanmar today, most of them. Today we have a force of about 1,005 of them. And when we had a conversation with them at the Mama, having a conversation over teh tarik prior pandemic, basically they only told us 3 things that's very important for us. 1, right? Give us decent accommodation. 2, food is very important to us because we work so hard. And 3, income. In Mummy, we pay them quarterly bonuses with the minimum wage today and the overtime that they get. Income is on average 3,500 to 4,000 ringgit for these foreign labourers. When it comes to food, you come to our canteen for our team. There's a Malaysian food corner and there's a Bangladesh corner where you get the chapati and all the other Bangladeshi's food, because that's what they look forward to at the break every day, the little things. When it comes to Myanmar New Year, or whether it comes to Bangladeshi New Year, we go to their quarters and we celebrate with them their New Year's because we want to give them a piece of home, right? And on top of that, we have another initiative during the lockdown period where with the growth that we didn't have enough workers. We work with the Malacca jail, I don't know what they call it, but basically Malacca jail, whereby if you look into the people who are thrown into jail, they are the hardcore crime, like for example rape, murder and all that. Clearly, we can't have interactions with them. But they also have basically a group of consumers that is what they call petty crimes, right? Curi roti at the mini market, credit card fraud, etc. And these people have been rehabilitated with 6 to 1 years more before they leave. And what we do is we bring them to our factory and they do cartoning, they do all this warehousing work and all that. And essentially we pay them a full minimum wage, you know what I mean? And every day they come in at the bus and then at 5 p.m. they will leave. That is the type of social work we do as well. That is win-win. What we really like to see is the work that we do cannot be vanity projects. It has to be something that win to us, but also win to society. Yeah? And on top of that, we also invest in business today that is also building more nutritious products for the next generation of snackers, right? Products that are gluten-free, made with sustainable palm oil, packaging that is fully sustainable, no added MSG, etc., which perhaps I can speak about later. So at the end of the day, I think to summarize my rambling, there's 2 parts to it. 1, find the areas that you can save that is less obvious and do not pocket that savings. Reinvest that in your people and they will reinvest that to your consumer and therefore that becomes a sustainable model of growth while doing good. Yeah.
That's interesting. Hopefully a lot of learnings there for other corporates in terms of the labor practices as well. Shifting gears to inflation. You mentioned a little bit, Pierre, but maybe let's start with Raymond. From a fund management perspective, have you been adjusting your portfolio? Has there been a strategic longer-term shift in terms of your investment priorities? I mean, just setting the context, inflation's been talked about a lot, and I think other countries are bearing the brunt of it a lot more than Malaysia. Malaysia is currently hovering around 3%, if I'm not mistaken. But how are you positioning now, given your portfolio is broader than Malaysia?
Yeah, so Malaysia's been quite insulated from the global inflation because we've been subsidized, right? I think the government number is 77 billion over the last year. And so we haven't seen the pure effects of higher oil prices, chicken prices, egg prices. And that's why Malaysian consumers are still relatively strong, and I'm sure Pierre and Valerie can give some perspective on that. But maybe I'll talk about it on a more global basis, because that's where inflation is really hitting. America just announced yesterday 8.3% headline inflation, 6.3% core inflation. So these are very, very bad numbers, right? And we are relatively bearish, but that is a consensus view in the markets, right? Bank of America basically came out with their fund manager survey, and it's the most fund managers are the most bearish since, even more bearish than 2008. So it is a consensus view. But why we are bearish is basically because of a couple of things. Simple thought: a third of the world is pretty much in recession. China. At one point in the last month, about 35% of cities that contributed 35% of GDP was in lockdown. So that's going to show up in bad GDP numbers in third quarter. Eurozone, you can see Germany, France, and UK are the 4th, 7th, and 6th largest economies, respectively. And all these are in recession too. You can see it in the PMI numbers. You can see it in the consumer sentiment numbers. And the energy crisis is escalating over the last month. To give perspective, electricity prices have gone up 7 times. It has consolidated. It went to as high as like 15 times, but it has consolidated. It's now only 7 to 8 times higher than what it was in 2020. So imagine an industry like you guys, who had like 5% of utility costs or something like that. Now it's raised 7 times. It's 35% of revenues. It just kills your margins, right? And so you see industries in Germany like smelters, aluminum smelters, high intensive electricity users. These are closing down. You see chemical producers importing from other parts of the world rather than producing it themselves. Ammonia, which is an input for fertilizer, it's gone up 24% this year, and that's basically increasing all your food cost. So inflation is really, really bad, and it's really killing in some industries in Europe especially. And that's why we're sort of very bearish, right? And Europe contributes to about 25% of S&P earnings in the US. So we haven't seen the EPS cuts that we expect, or the market has been expecting. We haven't seen that yet, and valuations are still relatively high. The S&P index looks fine, but the Nasdaq is at 27 times, and that's still a premium over the 10-year mean. And another thing why we're bearish is also what Jay Powell said at Jackson Hole. One specific thing that he basically quashed any hopes of a Fed pivot in 2023. That's what market took relatively easily. But what concerned me the most was when he actually quoted Paul Volcker. Paul Volcker was the Fed chairman in 1979, and he was battling inflation, a peak of 9.8% in 1981. But what he did was he pivoted too early, and that increased inflation even more. And he had to raise interest rates to 20% in 1981, and that created 10% unemployment rates. And that just created social unrest, depression, and yeah, the American economy suffered for a while. But Paul Volcker is seen as an American hero because he saved America from high inflation and basically prepared America for the next decade of economic growth. So that's what Jay Powell needs to do, right? Then he needs to control wages. What happened in 1981 was wages spiraled. Wages grew more than 5%. What we're seeing currently is about 5.3% wage growth. Wage growth spirals. Companies have to increase their prices. Inflation spirals. So that's what Jay Powell does not want to see in America, and that's why he needs to increase interest rates, keep interest rates higher for longer to suppress demand, and that's why why we should see an increased chance of a recession in America.
But drill that down for us. So bring it back to Malaysia and the impact on your portfolio. We've also got a question here from the online audience via the chat box. Seems you've got a following. Like I said, drill that down to Malaysia and tell us what are your top conviction equity picks?
Specific names or?
Yeah, sure.
Okay, wait, I'll give you three themes that we like, right? So the first thing was trade diversion. I spoke about that earlier. We see tailwinds for the next 3 to 5 years for Penang specifically. We like companies that are based in Penang and benefiting from the tech supply chain. That's one. Another is actually food security. So Pierre would be involved in that. But we like an agrochemical business in Malaysia. And what we believe that they are moving up this value chain. What they do is they produce chemicals that kill weeds. So they're used in cotton plantations. They're used in palm oil plantations, sugarcane plantations. So we like things involved in food security. And we believe that they will benefit from import substitution. So like I said, chemical producers in Germany, BASF is the largest chemical producer in the world, and they're shutting down and importing certain chemicals into Germany instead of producing them. And so we believe that they are a big beneficiary in just European oil, chemical producers. That's one we like. A third thing would be electrification, right? So energy crisis. We need to produce more solar panels. We need to increase renewable energy. The EV theme is very, very strong. Battery production. So Malaysia needs to attract that kind of FDI, right? That's the next phase of FDI that we need to attract. And what I need to say about FDI also, I forgot to mention, is that we're competing with other ASEAN countries. Malaysia can't rest on its laurels. We've attracted a lot of FDI, and it's high-level FDI. Compared to what we're attracting in Vietnam, because Vietnam basically stated that they're out of $22 billion of FDI, only 5% of that is actually high-level, advanced technologies, and we're seeing a lot of technology companies invest in Vietnam now. You saw LG, you saw Samsung, you saw Apple as well, right? So right now it's all low-level in Vietnam, but over the longer term, they are going to improve their skills. They're going to upskill. They're going to move up the value chain too. So Malaysia is competing with Vietnam. We're competing with Thailand with a huge amount of with a much larger population, right? Vietnam is 100 million population. Thailand is 70 million. We're at 30. So it's the pool of labor that's available to these tech companies that are valuable, and Malaysia needs to help increase that pool of labor.
Okay, thank you. And moving on to Valerie, Raymond has talked about inflation globally in the US, unemployment, and so on. In Malaysia, and because KIP Malls, KIP REIT serves the mass market, so the broader population, are you seeing that kind of translate into consumer behavior? Any change in trends recently?
Okay, so basically the Malaysian inflation, it has rose by about 3.4%. Whether there's any impact, surely there is, specifically specifically our tenant, because this rising in costs, it's affecting their profit margin, and this rising cost cannot be pushed over to the end consumer, because generally people are more price sensitive, especially now. But as you mentioned, because KIP Mall is all our KIP malls is basically a community-centric neighborhood mall. We are targeting the mass market in Malaysia, and majority of our tenant is also selling and providing daily necessities and services. We are seeing lesser impact as of now. Also, with the recovery of the economy and with more people feeling more confident of going out, we are seeing actually quite a good improvement in the footfall as well as the occupancy. So at this juncture, we are not feeling that impact so much yet. Yeah.
And then I guess as a follow-up question, we've got a question here from the Edge as well. Do you foresee any other challenges other than inflationary impact?
Hopefully no more lockdowns, because that would definitely impact our footfall. Okay, do we foresee any more challenges? Actually, in fact, this is very real. I think it's across board to all industries. Manpower, there's a lot of plans for, there's a lot of expansion plans from our tenants, but they are facing a lot of manpower issues. With that, obviously, that is impacting their opening hours as well as the operational matters. So it is it is still an issue that is not resolved yet. Hopefully, this will be a very big challenge because that will also ultimately impact our mall operation. And I hope to see some improvement in bringing more manpower from overseas. Yeah.
Do you share the same sentiments, Pierre? I know you're now a regional or global company. As you think about expansion beyond Malaysia's borders, has the government, our agencies, been supportive of that? Do you need more unlocking of manpower? What could you ask of the government if you could?
Where do I start? I think for us, we have had fantastic collaborations with the government entities, whether it's a local state government in Malacca, where we were founded, as well as with MITI, MIDA, in terms of helping us grow within Malaysia and beyond. Our aspiration is very, very clear. We are able to see what we have done in Malaysia. For example, in the potato crisps market, we have a 70% market share, right? And how we have done that over the years is essentially competing with all the big multinational. I go back again with our secret sauce of providing simultaneously the 3 core pillars, which is hard to do. Many companies can do 2 or 3. Many young startups, they are able to have a fantastic brand and consumer engagement, but because of the lack of scale, they have to price it very, very high. Therefore, great quality meets great engagement and excitement, but not great value to the consumer. Therefore, when price is very high, you're not able to reach the masses, therefore no volume. And the many traditional companies are very good in quality and great value through efficiencies, but they're not very good in engaging the young millennial consumer. So therefore, the secret sauce is essentially in any business we believe that would do well in the modern world, have to combine all 3 pillars. You must have great quality, that is no doubt. You must be able to run your business very efficiently in order to have a great margin, while also, in our case, reaching the masses. And the third part is you must be very, very effective in capturing the imagination and excitement of the consumers, right? So on that basis, where we have worked very well with MIDA, for example, and Martrade, it's we've recently been awarded the Principal Hub status, where together we're very grateful for the Malaysian government to help us build Mami towards being Malaysia's multinational food or snack company. Because if you look, Nestle is from Switzerland, and then you have URC, for example, from Philippines, you have Indofood from Indonesia. You know, Malaysia needs a flag carrier. And it's no value if we only take short-term subsidies in order to make us more profitable in the short run. Where I think the foresight of what MIDA as well as Martrade has helped us significantly is helping us through the tax breaks initiatives, etc., to reinvest and transform our business towards not the commoditized snack company that is able to provide quality at a cheap price, but rather help us reinvest in our brands, right? So since basically the idea of adding the third pillar of excitement, we have invested in being the global partners of Manchester United. That put us in the map, right? Because when suddenly a brand like Manchester United announces that they're partnering with Mr. Potato, people start Googling, right? So we have calls from Bloomberg, CNN and all that, and they start Googling and say, who is this Mr. Potato with this funny sombrero, a cartoon character partnering with Man U? Because in the list of Man U partners, you see DHL, you see Aeon, you see Audi and all that. And then when they start Googling, they see Malacca. Where is this Malacca? Let alone I don't even know where Malaysia is, right? So essentially, where we feel, and since then, right, we've used technology to identify some of our other partners as well. We had about 65% market share here in Malaysia with our Mr. Potato brand, and then we partnered with this a Korean celebrity called Chow Yu, and that added 46% more volume in the space of a 6-month promotion. That goes to show how the right engagement can really drive volume. And since then, with the upcoming World Cup, we recently signed up Neymar Jr. as our global ambassador. And hopefully Brazil wins the World Cup. If not, then RI will be impacted. So I guess my point here is that. Sorry, what was the question again?
How can the government help you?
The government have been fantastic, right? So essentially, basically, where we are very grateful that the government have been very supportive in helping us live our vision to grow Mami from just a Melaka Kampung company towards a global beater, and focusing on reinvesting in areas of where we feel future value is, not so much for the sake of lowering costs only per se, but rather able to charge a premium by providing consumer with an extremely engaging and also great consumer experience. As what we said,
the experience of snacking no more starts and ends with you putting a product in the mouth, but essentially, the whole idea of looking for the product, we have had campaigns whereby people have to go out hunting for the product, right? Because it's limited edition, only 1 in every 30 packs have this special product in there. So consumers go all around supermarkets to find for this product, and they record it, and they share in social media. So now, buying the product, the journey of buying product is an experience with the brand. When finally finding the product, tasting it is a physical experience. Then sharing it on social media and they get their likes and their comments and all that is also an emotional experience now. So therefore, snacking is no more an experience of what you put in your mouth and that's it. The buying process, we have to think about how do we manage that journey. When they consume the product, what sort of sensations? When we talk about spicy, how soon the spicy kick is. Is it right in the first second or 10 seconds later the spiciness kick in? Then when it comes into, when they upload into social media, how do they engage with celebrities like Neymar or Chanu, etc., the platform that we give them? So we actually have to think about the whole ecosystem of a consumer journey. And therefore, in that summary, the government has given us a lot of opportunities to reinvest our capital into our brand and therefore grow beyond Malaysia. And today we have investments in America. We are exploring towards building a plant there in Texas because we have this brand that we invested in. The brand is called Good Crips Company. It's founded in America. Today it's sold in over 20,000 outlets in all of Whole Foods, Kroger's, as well as Walmart. And the proposition there is slightly different from what we find here in Mr. Potato in Malaysia. The brand there sells the idea about the product is gluten-free, it's made from sustainable palm oil, made from fully sustainable packaging, it is basically non-GMO, and also essentially no added MSG. Everything that Mr. Potato has, except that we don't claim it here in Asia. Okay. But by playing that game, they're able to charge 4 times more premium. Why? Because again, go back to social belonging. When the mother takes this to a kid's party, she feels, hey, I'm not bringing a basic product, I'm bringing this good crepes, right? And then suddenly she's the envy of all the other mothers. That makes her feel good, right? So that premium of few dollars, I feel good. And the second thing is also that when she passes her kid a product that doesn't have all these so-called gluten or MSG and all that, she feels that she's a mother of the year, right? So for just a couple of dollars, you can feel so good about yourself in a way that is halal, no need any form of alcohol to make you happy. Why not? So that's the game that we play in today. We are in the game of using a physical product by adding an emotional element to provide an emotional experience for our consumer.
Yeah, I'm a new mother. What you just said makes me want to run across to America to buy some of that product.
Don't worry. Some of the products have gone to LA and shipped back to KL. You can buy in certain supermarkets for 18 ringgit.
Great. With that, we are very nearly at time. Let me quickly go over to Val and Ray in the last minute or so. You've got a very long runway ahead of you in corporate Malaysia. Hopefully you'll stay within the country. I'm sure you will. What is your strategic goal for the company, if you want, for the country, and yeah, maybe just share a little bit about that.
I think in terms of ESG, as I mentioned earlier, we have covered quite decently in the E sector. Hopefully, we'll look at more of the other options that are available: waste management, water harvesting, and even expanding on the solar panels in all our assets. But the S is something that I've just learned a lot from Pierre, so that's something that I will definitely go back and think very thoroughly about. And the G, obviously, we are a highly governed company, so in that aspect, we are also quite well covered. So this is the first thing that I will put into action once I get back to office. In the next couple of years, I'm hoping to see there are more assets that we can acquire under the REIT because we have a target to make in the next 3 to 5 years.
Yeah, for us, it's just basically finding investment opportunities over the long term, ensuring the free cash flows to the family office. So anyone who needs capital and has a great fundamental business, look me up.
Great, thank you. That's it for today on this panel session. Thank you all for joining us.